Hey guys, I just want to bring up an opportunity for resource investors. If you want to rub elbows with the big wigs and talk to companies directly that are handpicked by Rick Rule, well, you got to be in Boca Raton from July 7th to 11th for the Rick Rule Symposium. The event has become a premier event in the mining space, and they're going to have some pretty big speakers like Robert Friedland, Sean Rusin, and the great Rick Rule. And also, we're going to be there. You can meet the Deep Dive team in person. So if you're interested in rubbing elbow with some of the biggest heavy hitters in junior mining, check out the link below. Good afternoon, everyone. Today I'm chatting with Rick Rule. In this interview, we discuss Canada's economy, and Rick actually has some bright spots to Canada's economy, which we typically don't hear about these days, where it's mostly doom and gloom, and yeah, we are up for some hard times. We also discuss where things could be heading in this political environment for Canada, and of course, we get into junior mining. We discuss the types of stories that Rick likes to invest in, what he's looking for in order to decide that he wants to actually involve himself in a project or an asset, and where he thinks he can add value. And we discuss copper, where the price could be heading, and ultimately how Rick feels about many of the copper assets that are in some of the smaller cap Canadian junior names. All right, everybody, enjoy the interview. Rick, thanks so much for joining us again.
Steve, it's always a pleasure. Thank you for having me back.
So Rick, I'm coming up with this question on the spot here. This just came across my desk, and I just thought it's sort of an interesting commentary on the state of the stock market these days. You can see here, we've got a picture of the CEO and founder of NVIDIA, Jensen Huang, signing, it looks like the breasts of, I assume, a shareholder. What does this tell us about the state of the stock market these days? We basically got like less than a dozen stocks that everybody invests in. And then in addition to that, they invest in ETFs. It seems like the art of stock picking is less and less of a thing. Does this create more of an opportunity for people who want to do their due diligence and go and find value? Or is this just the new paradigm that we're in?
Oh, I think it creates all kinds of opportunity. It talks to a bunch of things. It talks about the fact that money is still too loose. It also talks about the fact that at least if you're in capital-intensive cyclical businesses like natural resources, that it isn't too late to get involved. You don't see this young woman asking Pierre Lassonde or Mark Bristow to sign her breast, which is to suggest that the industries that we like are not overpriced and are not in favor. I think
the top. That's the top. We'll know we hit the top of the commodity super cycle when Mark Bristow is signing a woman's chest.
Well, yes, I think Pierre Lassonde probably has other charms, but yes, I'll go on record and say if I observe Mark Bristow signing a woman's breast, that I will be a seller.
So you mentioned the money's still too loose. I'm in Canada. I see that you're now on Twitter, or X as Elon calls it. What we get inundated with on X or Twitter as a young Canadian is nonstop real estate talk. They say that's every young person, because there's not a whole lot of industries in Canada. Unless you happen to be a doctor or a high-priced lawyer and you're lucky enough to get in one of those fields, there's not a whole lot of industries. There's not a whole lot of entrepreneurship in Canada. There's some, but there's not nearly. I'd argue on a relative basis, it's a lot lighter here. So everybody decides, I want to go be a real estate agent, which means that they're going to become an influencer, which means that they're all over social media talking about real estate. But with that being said, now we're getting inundated with how there are record listings. And we've got this affordability crisis where Canadians can't afford to live. We're bringing in record immigration, which for the first time in my lifetime, I'm actually starting to hear people say things that are not necessarily pro-immigration, which is pretty new. I'm curious here. What's your take on the state of the Canadian economy? Do you think that Justin Trudeau is the biggest disaster we've ever had in leadership in at least recent history, your lifetime, we could say? And what does this mean for the future of young Canadians?
With the caveat that I'm not Canadian, I'm American. I have a lot of experience in Canada. Of course, I emigrated to Canada in 1970. 1977, at the height of the Yankee go home stuff, I decided to take them at their word. I did. I went home. I don't think that Justin is as damaging as his father, because I think his father was more competent. I suspect if Carney succeeds Trudeau, that we'll have real problems. If you have a competent oppressor, it's much worse than having an incompetent oppressor. And I would describe the young Trudeau-file, as an incompetent oppressor. There are some underlying strengths in the Canadian economy that I think need to be noted. Canada still has rudiments of the rule of law, which is a wonderful thing. Canada still has an educated population, which is a wonderful thing. Canada has more than functioning capital markets relative to the size of the country. Canada probably has the deepest capital markets in the world per capita, and a solvent banking system, an oligopoly maintained by the government, to be sure, but a solvent banking system. Has a lot of things going for it. It has some challenges. There has been a perception in Canada, unfortunately, that the future of Canada is the government. There is a greater acceptance in Canada that other people have an obligation to look after you, that you don't have an obligation to look after yourself. That's very important and tragic, I think. You have a prime minister who seems ashamed of Canada's best industries. He is looking for various industries that he can promote and subsidize. Automobiles, green energy, now vaccines. When Canada is an absolute world leader in natural resources and natural resources technology. In particular, the oil and gas technology sector is something where Canada is an absolute acknowledged world leader. And the Prime Minister says there's no business case for it. The Germans want your gas, the Koreans want your gas, the Japanese want your gas, the Americans want your gas, and Mr. Trudeau doesn't seem to see a business case for that, which is a problem. When Canadians begin to need to understand, like Americans, by the way, these problems aren't unique to Canada, that you need to be protected from government, not by government, we will have set the stage for a rebound. You talked about real estate, which I'd like to talk about a bit too, because it's instructive. When I emigrated to Canada, there was a perception, because real estate had been fairly dormant through the 50s and the 60s, that real estate was never really going to perform. And when you bought real estate, as I did in the early part of the decade of the 70s, you bought it for yield. You bought it because you could put 20% down on a duplex. You could mow the lawn, paint the front, increase the rents a little bit, and your cost of capital stayed firm while your return on capital employed increases. The idea being, at least for the first few pieces of real estate that I bought, I didn't know they'd go up in price. I just assumed that my tenants would pay off the mortgage, and after 30 years, I'd have a free bond. 40 years of performance in real estate has meant that people don't use an income approach to real estate. They just believe that if you get on it, you've sort of hitched your star to Santa Claus sled. And I think that's dangerous. I think real estate is a spectacular business if you can add value. But the increasing price of real estate in Canada and the United States has validated the narrative around real estate. In other words, people now believe it to be true because it's been demonstrated to be true. The problem with that is that the increase in price has taken away most of the incentive to understand the narrative. When I was buying real estate in Canada, you could buy it on an income approach, and the capital gains took care of themselves. The capital gains, the capital appreciation in Canadian real estate has meant that the underpinnings of value with regards to rent have largely disappeared in the markets that most people are paying attention to. A second problem in Canada versus the United States is that in the United States, when we buy even a single-family residential, we have access to a 30-year fixed mortgage rate. The predominant mortgage instrument in Canada is a 5-year mortgage, which means that the credit risk and the rate risk is borne by the borrower, a consequence of Canada's oligopoly. In the United States, the credit risk and the rate risk is borne by the bank, which makes real estate leverage, while not necessarily safe anywhere, much safer in the United States than Canada.
So, Rick, something I think about a lot when we talk about the banking system here in Canada and just real estate and how much prices have appreciated, and there clearly is an affordability crisis. I mean, we got neighborhoods that are, say, the worst neighborhood in one of the least desired suburbs of Toronto now. You're looking at a starter home, that being like a 3-bedroom row unit or townhouse, is like $800,000, which means that you've basically got to be in the 95th percentile of income, household incomes, just to be able to afford that house and be house poor. And something I think a lot about when we talk about how it's a government-backed oligopoly is that we've got these banks here in Canada that are effectively loaning out money, and they quite frankly don't care about the math. The math doesn't, because it's largely insured by the CMHC or Sagan, who's owned by Brookfield. And it's something I wonder about is also when we're talking about these 5-year mortgages versus the American 30-year. And we think about what happened in the US in 2008, 2009. A lot of that was because people were taking on teaser rates, right? That were, those 0 to 2-year mortgages that suddenly just spiked. And because we have this dramatic increase in interest rates, I know everyone likes to say, oh, you don't know high interest rates back in the 80s. Well, still, I mean, when you go from near 0 to 5%, that's a pretty big spike. And it makes me wonder what's going to happen to the Canadian banking system if interest rates don't come down in 2 years. I know everybody says this week we're probably going to see 25 basis points. So what? But is it just going to mean that all the banks' toxic loans are going to end up on the Bank of Canada's balance sheet? And then ultimately, what does that mean for Canada's dollar?
Well, 5-year duration limits the risk a lot. It means that the bank is only wrong for 2 years or 2.5 years, not wrong for 27 years like an American bank. Think of yourself owning a 30-year bond for a second, Steve. If you own a 30-year bond and the bond is priced to yield 3 and interest rates go to 6, the net present value of that bond, the next present value of the income stream, is cut in half. So at the same time that the value of your asset is cut in half, if you're funding that asset with overnight deposits and your cost of capital goes from 1 to 3,
yeah,
you're bit on both ends. The nature of the Canadian single-family residential market, as you describe it, is mostly a 5-year product. There are other outfits, Coast Savings, places like that have other products. But Coast Savings doesn't keep any of those bonds, any of those mortgages. They originate them and sell them to insurance companies. So the risk is diffused. The Canadian banking system, as you suggest again, is writing 5-year paper, so shorter-term paper, insuring that paper with the CMHC, turning that paper into mortgage-backed securities, and then slicing and dicing the mortgage-backed security. The fact is that the Canadian banking system, at least relative to the American banking system, is pretty secure. It's not as good a place to be a borrower because there's less competition. It's not as good a place to be a depositor because there's less competition. It's a much better place to be a shareholder because there's less competition. It's a less good place to be a taxpayer because ultimately, as a Canadian taxpayer, you're shouldering more of the risk of the Canadian banking system. But once you understand all those things, it's a reasonably good place, I would suggest, to be an investor. You just need to understand the pros and cons.
Yeah, but it's a reasonably good place because we're insuring all these banks' mortgages that they're handing out. They don't have to worry about the risk. And getting back to my point about one of the least desirable neighborhoods with a 3-bedroom starter home can only be afforded by a house that's in the 95th percentile of household incomes. It just demonstrates that the banks don't give a shit about the math on the loans that they're giving out because they're insured.
It suggests to me that the furor at the lower end has to subside. because, as you suggest, there's an affordability crisis. Now, again, I have to personalize this. When I was an immigrant to Canada, I had a lot of aspiration and not much money. So I bought a triplex in a bad part of Vancouver. It had been run down. I lived in a basement suite in the basement, rented out the two good suites upstairs. I did what all immigrants do, or not, at least what all smart immigrants do. I used my savings as they occurred to fix up. In other words, I added value to real estate. People who are buying starter homes just because they think the price of real estate is going to go up and don't have the ability to add value need to look at the juxtaposition between the price of that real estate and the affordability of that real estate. And I think that's problematic. I noticed not too long ago that a house that I bought in the east end of Vancouver in 1973 for $21,000, $5,000 down, just sold for $1.4 million. Now, that's not all about the appreciation of the real estate. A lot of that's the depreciation in the dollar. But still, that building at $21,000 covered itself via rents pretty easily with a 20% down. There's no way in the world that building covers itself at $1.4 million.
It seems to be like we're coming to a point here in Canada where something's going to have to give, where like the people don't have the incomes to support these levels of debt. And I saw a clip of Stephen Harper talking about when he entered as Canada's prime minister, that he says, and he acknowledges, he walked into a good situation, which is something that's extremely rare for the history of conservative prime ministers.
Yep.
And he talks about Pierre Poilievre, and he says he thinks that Pierre Poilievre is going to be Canada's next prime minister, but he also sort of acknowledges that he doesn't know if he'd want to walk into the situation that Pierre is going to be walking into, because it's
I think the next prime minister of Canada runs in the same circumstance that Jean Chrétien walked into, which is to say, a very, very, very tough circumstance. I don't think anybody who wasn't a Quebec Liberal would have had the political backing to do in Canada what Jean Chrétien did. Reduce government expenditures. I don't think he did it willingly. I think he did it because he had no second choice. And as Harper said, he ran into a circumstance where the worst of the sins had been corrected by the time that he came into office. I think it's instructive for Canada to note that despite the fact that Harper talked a lot about cutting things, he didn't cut the size of government, nor did Ronald Reagan in the United States. They merely cut the rate of growth of government. You don't have to do all the right things. You just have to do fewer stupid things. It's wild when I get pessimistic, which I do occasionally, not often, but occasionally. And I sit back and reflect, and this is more an American story than a Canadian story, but our culture is still creative, tenacious, hardworking, brilliant. We still have a place where 6 kids can commandeer a garage in Sunnyvale, California, and out pops Google. Or where an immigrant from Taiwan ends up being a financial superstar and signing girls' bras. Our individual creativity and tenacity seems to overcome our collective stupidity. And the consequence of that is that although government will never get it right, sometimes a circumstance comes about where they get it less wrong. Look at what's happened in Argentina with Milei. I'm not suggesting he's going to be allowed to continue, but the fact is that he has, by presidential decree in 90 days, reduced government expenditures enough that he's achieved the first balanced budget in almost 20 years. And he's brought the Argentine inflation rate down from some number over 200% to single digits. It tells you what could be done. You don't actually have to do it right. You just have to do it less wrong.
Okay, so Rick, we've talked a lot about politics, and that really wasn't even my goal here today. And I appreciate that you're generous with your time. But yesterday I was having a conversation with a friend who has, he's been CEO of a few small junior mining companies. And he was talking about a deal he was kind of putting together, and we were possibly going to invest in. And he suggested that if you were working on a new company that was kind of small, you're better off having two commodities that are even somewhat unrelated, like say gold and lithium. We'll just pick those two as an example, because that way you're kind of reducing the risk of just sort of chasing that one commodity, which, I mean, as well as anybody how junior mining capital flows work. You're going to go into one, or capital's going to tend to flow into one commodity or another. What's your thoughts on that? Do you think that that's a smart move by a company that's just trying to find its wings? Or when you look at those types of companies, you kind of just roll your eyes and say, I'd never invest in it. It's totally unfocused.
The latter. You are supposed to use capital markets to raise capital to do something that you're good at. If all you are is a story merchant, you should go sell cars. I've made money in juniors by backing extraordinarily high quality people that were better at precisely what they're doing than their competition was. And in every case, in every single case, the people who really made money were pursuing stories that were out of favor, not in favor. Robert Friedland goes to Congo when there's a civil war. He's going after copper when copper's selling at 80 cents a pound. The last thing Robert Friedland wanted to do was go after a hot story. Robert Friedland didn't want to go to work for Bay Street. If Bay Street says XYZ is hot, Robert says, what do you guys know? You're just used money salesmen. The entrepreneur who is harnessing capital to make true economic gain needs to pay attention to his or her durable competitive advantage. What does he or she do better than the competition? What market niche is worth exploring because they can outcompete people? The person that you were talking to was simply saying, what narrative is overpriced enough? What is it that people are dumb enough that they will give me the money to do when there are other people who are already doing it? So very much the latter.
And I love that response. And I'm going to, hopefully he doesn't see this video, but I'm going to give you another one.
I hope he does. I hope he has a moment of self-absorption, self-reflection. And he says, why am I raising money to raise money? Why don't I raise money to make money? Why don't I figure out something that nobody else is doing that I can do better?
Another quote that we sort of had a bit of a debate about was the idea that we got an asset out there that has had a lot of money spent on it, historic drilling. There's a net present value on it that has a high value. I'm not going to say which one it is, just because it's there's people looking at it right now. But the argument that he suggested is that asset doesn't have any value because so and so company that is in that commodity that's nearby hasn't bought it out, so therefore there's no value there. Do you ever hear those arguments? And do you not think that could be said about basically anything that is basically been forgotten about and undervalued?
There's not a great rule of thumb. I really think it depends on its strategic importance to the other party and where it sits on the cost curve, and also its scale. When I was backing Ross Beatty in the early part of the decade of the 90s, building Lumina Copper was selling for 90 cents a pound. There were a bunch of copper projects in the bowels of the majors that they'd spent 60, 70, 80, $90 million on that had no net present value at 90 cents, but could be valuable at $2. We were able to buy projects from, say, Rio for $3 million that when the copper price went up and when we had spent more money on them, we were able to sell to Teck and Marubeni for $300 million. The fact that in the present market something doesn't have value to somebody else is not necessarily important. But every different circumstance is different. You may know, Steve, that in addition to being an equity investor in junior mining, I'm a debt lender, a debt provider. And in every circumstance where somebody brings me an asset, if I don't know who I can sell it to, in other words, who's nearby for whom that asset would be strategic, I don't lend money against it. It may be,
Interesting.
it may be that people see no need. The holders of adjacent projects see no need, that they're trying to bottom tick the market, or else they're afraid if they buy it that their own financial circumstances precarious enough that they won't be able to pay their own salaries in 2 years. In other words, they're less strategic than tactical. But it really depends, circumstance by circumstance by circumstance. I have done very well in my life buying deposits that have been neglected by others, and introducing management teams that could beneficiate those deposits because of specific expertise they had, or buying deposits that were out of favor because the commodity price at that point in time was too low. Dial yourself back to 2022. Uranium prices are $20 a pound. Explorers all over the place are relinquishing claims in the Athabasca Basin because they have their choices between making the concession payment or paying themselves salaries. What do you think was more important to management?
Yeah.
It's really a function of circumstance. There are other deposits that have had a lot of money spent on them, and they might have high net present values, but they have high net present values because they have large amounts of low-grade material that doesn't take into account either the upfront capital cost or the limited margin, which is to say slight deterioration in the commodity price takes away all the net present value. So it's really a circumstance by circumstance by circumstance decision.
Yeah, and I appreciate that answer, given just the overall lack of specifics I gave you to really navigate that. But it is something I hear all the time in investing when we're looking at companies that, this company, well, it's trading as like a 3-cent stock or 10-cent stock or whatever, and nobody cares because if it had value, somebody would have bought it, which is something I kind of roll my eyes at. You mentioned 90-cent copper. And we had Craig Perry on last week, who I'm not sure if he's going to be at your conference or not.
Craig's a good,
he's
a good friend.
Yeah, he said he said he was going to be there, and he casually, and we had a great conversation. I learned a lot from him. But we were casually talking about where the price of copper could go, and something I appreciated. And he's been involved in a lot of discoveries. So I just in general give a lot of merit to anything he says. But we were talking about the price of copper, and he just casually threw out there that copper could go to $30 a pound, which sounds insane. And most of the copper people I talk to that are near-term copper asset producers or even copper producers, they're usually a little bit more we'll say they're not quite as bold in their predictions of where the price of copper could go, maybe $6-8 a pound. But I kind of look at what's happening around the world, whether we're talking about First Quantum in Panama, or some of the other companies that are out there that Adventus, I thought that was disappointing that they were not able to take that any further, and they got taken out by Silver Corp. And it just kind of makes me think that we're really not producing enough copper mines around the world, and governments are kind of getting in the way, and there's just not enough capital flowing into a lot of the names that are close to getting to production. I'm curious, where do you think the price of copper can go? And do you think that we need much, much higher prices of copper to really attract risk investors into the space?
No, I don't think we need much higher copper prices to attract risk investors into the space. Having said that, there's a dearth of good quality projects. I'm an active investor at this price, and there's not much to invest in. If you're looking at the median copper project in the average brain-dead Canadian junior, there's probably no copper price that should attract investors because the projects are shit. There are, 15, 20 projects where capital can be attracted. When you ask me where the price of copper could go, that's a difficult question, because if you give me the use of the word can, I can make a case for anything. But I need to remind you a couple things. One, markets work. Very high prices are self-correcting, just like very low prices are self-correcting. On the other side, if you doubled the copper price today, you wouldn't change production much 5 years from now, because it takes a long time to permit and build a copper mine. There's a wonderful project in the United States which illustrates this well. Resolution. 1.5 billion tons, 1.6 billion tons, 1.5% copper, 3 times the average grade worldwide, in an allegedly safe political jurisdiction, the United States, in Arizona, #1 copper producing state in the United States, 3 times the average grade, next to a highway, rail, power, towns with copper workers, copper miners, stuff like that. 26 years in permitting so far. 26 years in permitting. So almost no matter what we do, absent a really ugly global recession or depression, you're going to have a copper supply squeeze in 5 years. There's nothing you can do. In the near term, if that happens, the copper price can go almost anywhere because it's difficult in the near term to substitute other stuff for copper. Yeah, sure, you can use aluminum in some transmission applications, but that takes time. That fabrication substitution takes time. Longer term, the cure for high prices is always high prices. One other thing I need to say, a lot of the increase that we've seen in commodity prices, and for that matter, equity prices and home prices, isn't so much the increase in the value of the good being transacted on. It's a decrease in the value of the denominator, which is to say the deterioration in the purchasing power of the dollar over 20 or 30 years is a very important part in the alleged increase in overall pricing that we've seen. Do you understand what I'm saying? You have to consider both the numerator and the denominator. The wheat price, the wheat price is quadrupled. Well, purchasing power of the dollar has probably declined by 90%. So in a nominal sense, yes, wheat is 4 times as expensive. In a real sense, the real price of wheat in gold terms has declined.
So when you say that a bunch of the copper projects that are out there, that people are floating out there in the junior markets, are basically effectively worthless. And I know that wasn't your exact words. I think you called them shit. But if copper theoretically, let's say copper theoretically goes to $12 and we need more copper and there's a lack of projects around us, does that make those quote unquote shit projects actually kind of interesting? Or do you think that we basically got to start betting on grassroots exploration programs that are going to go out and find the next big copper mines?
They stay shit, but the share price goes up because the narrative changes. In other words, if you're a speculator, if a 10-cent stock goes to $2, maybe you don't care that the project never gets mined. You need to remember to sell, by the way. Don't hang on for 3. If you have something that wasn't worth a dime and isn't worth 2, don't ever count on the fact that more people, even dumber than you, will come in after. We need to do a lot more grassroots exploration for copper. And we need to do it in places that are prospective, that we haven't had the guts to explore before. We need to spend more money across the border from Chile and Argentina. We need to grit our teeth, spend more money in Ecuador and Colombia. We need to explore the whole Tethyan metallogenic belt, all the way from Turkey through Mongolia. That's where the big discoveries are going to be made. The idea that we are going to be able to discover a world-class copper deposit within an hour's drive of McDonald's on the Trans-Canadian Highway, pretty low. Pretty low.
Okay. Well, I guess I should take a look at my portfolio tonight. Rick, I really appreciate you hopping on here and doing this. I probably got another 15 questions I could get to, but you've been generous with your time as it is. I'm looking forward to seeing you at your symposium. for our audience. Do you want to give a quick little plug on what's happening?
Yeah, by the way, I'm really excited you're coming down, so thank you for that. That'll be great. So the Natural Resources Investment Symposium is, I think, in its 28th year, which means, first of all, we stood the test of time. Obviously, we've done things right because we've succeeded. What are those things? We have great big picture thinkers, people who tell you about the world the way it is, not the way the CBC wants it to be. Jim Rickards, Daniela DiMartino Booth, Grant Williams, people like that. After you've had your paradigm adjusted, we bring great analysts who've made money in resources for 30 years. And not some retread from an investment bank that failed at technology and got dropped down in gold where he couldn't do any harm. People who really made money where the rubber meets the road. At my conference, Steve, every public company exhibitor has been vetted. The attendees have told us that they're not advertisers, they're content. So if we don't own the stock, they can't buy a booth. At every other conference I know, the qualification to be an exhibitor is a check that cashes. It's pretty simple. Beyond that, we have this wonderful feature called the Living Legends. For 28 years, we have invited panelists who have built multi-billion-dollar mining companies from scratch. What's important about that is that they tell you the lessons they learned in building a multi-billion-dollar mining company. They teach you how to identify 40 million, 50 million, $100 market caps that are going to 2 billion. Really, really, really useful. Finally, this. At my conference, we're going to give you much more programming, 60 hours worth in 4 days. You can't absorb it all. You can't do it. But every proceeding, including the breakout sessions, is taped so that you can come back and learn the lessons that you missed the first time through. And if all that doesn't work, like every other educational product that I sell at Rule Investment Media, if you don't think you got your money's worth, email me. I give you your money back. Gold-plated money-back guarantee. If you suffer through 4 days of it and you don't think you got your money's worth, by the way, if I give you your money back, you don't get to see the tapes. But if for any reason whatsoever, you don't think that I've given you what I told you I was going to give you, email me. I'll give you the money back. The financial risk is all mine.
Well, Rick, thanks very much for hopping on here. I look forward to seeing you in Florida. And as always, our audience loves it when you come on here, and we are grateful for your time.
Assuming that I didn't insult all of them too much, if they care what I say about natural resources, they're welcome to go to my website, ruleinvestmentmedia.com. If they go there and list their natural resource stocks, the good, the bad, and the ugly in movie parlance, for no obligation and no charge, I'll rank them 1 to 10, 1 being best, 10 being worst. And I'll add my comments if I think my comments have any value. That's ruleinvestmentmedia.com for free. Natural resource portfolio rankings. Please no tech stocks. Please no pot stocks. Leave an old guy to do what he does best.
What about if a female admirer wants you to sign her chest to go on social media?
Should that happen, sell your resource stocks. Obviously, it's not the charm of a fat, old, bald credit analyst.
Rick, thanks so much for doing this.
A pleasure.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.